Yeah, guys, yeah. I was saying we can wait for 20 people. Now we have like 85, 15 will get us on the way. Now I think we can start. Today, guys, I'm gonna teach about patterns. Ne? I know like most of you knows the patterns, but you don't know like how to use patterns, like how to enter using patterns, but you know how to like see them. Like so today I'm gonna show you like exactly how to enter them, like how to spot them, everything. Uh we can start here. Here is my like motivational. I'm gonna read it for you. Like start where you are, use what you have, do what you can. Yeah, if you understand, like you know yourself. So, guys, now let's jump to the guys. Please mute yourself, guys, because I can't hear what I'm saying here. I don't want to hear a lot of voices, guys. Please mute yourself so then we can start. Yeah, let's start now. Uh, yeah, here's the best broker, as you can see, space market to the world. Make sure, guys, you register with the best broker and make money with us because we're making money this side. Yeah, we're really making money this side. You don't need a lot of money to make money. Even 100 rand can make money. So start today, guys. If you don't start today, I don't know. So we're gonna start. We're gonna start with the yeah. Let me show you. Uh, yeah. Yeah, we're gonna start with the double bottom pattern. Ne? Yeah, I know like most of you know you guys know this but like you don't know like how to spot them. What time to enter, what time to exit, like those things. Because you guys, I feel like some of you are scared. You're scared to enter. You know, like you see double bottom and double top, but you don't know where to enter, where to exit, where to put your take profit, stop loss. Yeah, today I'm gonna teach you there, guys. I'm gonna show you how to enter, how to put stop loss, how to take profit, all and all. Let's jump to the chair. Because now we're starting with the double bottom and double top. Mm. You're saying, yeah, check. Yeah, yeah, you see, guys, as you can see, guys, here is our, yeah, here is our double top and double bottom. Ne- As you can see there, I have my stop loss there and entry and TP there, but still, like you guys, some of you, I feel like you can't enter at the top, but you can enter at the neckline. You see, so I'm gonna show you like how to enter on the entry on the top and on the neckline because I know like we guys like we don't trade the same because some of us like have fears, like some like we know ourselves like we don't fear anything. So, but if you fear, I'm gonna show you where to enter. But if you know that you don't have a fear, which means you're gonna have to enter at the top. So I'm gonna show you how we do these things. Uh, Here is our double bottom, double top. Double bottom is the same as double top. Entry, stop loss, TP are the same. Mhm. Here's our head and shoulders and inverse. No? It's the same with double top and double bottom. Their entries, stop loss, take profit, they're all the same, but just that we guys we don't know like where exactly to enter and where exactly to execute like our trade and push stop loss and TPs. But today I'm gonna show you everything. Don't worry, guys. Make sure maybe like cause there's some like cause you're not gonna see this. You're not gonna see this anywhere, but you have to make sure that maybe if you got some script or pen and maybe control these things with me because these things when I'm going to explain on the chat, I'm not gonna come back here and show you these things entries NTP, head and shoulders inverse. But if you draw these things, when I go there to the chat, when I draw these things, you're gonna see exactly like what I'm really talking about. Just do a favor for yourself and put and have some script and some pen or pencil and draw these patterns with me because now I already have them. When you have to have yours on your side. Okay. Here's our ascending and descending channels. I'm going to explain about the ascending and descending channels. As you can see, these ones are parallel to each other, which means if you have something like not parallel, but you see the same pattern, know that it's not ascending or descending. Descending, it must be parallel to each other. I'm going to show you on the chat what I'm talking about here. Let's move. Yeah, here's our horizontal channel. I'm going to show you I know this is simple, guys, but it's simple, but you guys, you don't know like how to use them. But I'm going to show you how to use them and where to execute your trade and where to exit your trades, actually. Uh, we're starting now. Yeah, here we start, guys. Let me just go back. Yeah, we're gonna start with double top and double bottom. You must listen carefully, guys. Make sure you mute yourself, guys, so that guys, please mute yourself so that like if you didn't mute yourself, like you are disturbing. Yeah, I want to show you a pure double top and double bottom, guys. Yeah, I must start with double top. Let's start with double bottom, but there's double bottom. Let's start with double bottom. Start with double bottom. Yeah, as you can see, guys, this is our double bottom pattern. How do we identify our double bottom pattern? I'm gonna explain to you like how do we identify our double bottom patterns so that you guys can understand what I'm talking about. Yeah, guys, I was talking about now. Let's start with a double bottom. Ne? Yeah, I'm gonna show you like guys like how to execute on double bottom and how to identify them, like how to identify double bottom. Let me start with putting this. Yeah, our rectangle. Yeah, we start now. As you can see, this is our double bottom and double bottom. To identify them, you have to like to look at at the left side. I don't know when the side is the right side now. So like these peaks, these lows must be equal. If they become equal, which means it's our double bottom. Ne? If they're not equal, we're not gonna call it our double bottom because then they're not gonna be equal. And I don't know how you're gonna spot it because it is not equal, and I don't know how you're gonna name it to be double bottom while you see like they're not equal. As you can see here, like they are equal here, like these lows are equal, which makes a double bottom. That's how we identify the double bottom. You must look for the equal lows that makes it to be a double bottom. Yeah, we start now. Let's start. I want to show you guys like the right time to enter and the right time to exit on a double bottom. It's the same thing with the double top, but I'm gonna show you all of them, both of them. This guys is our double bottom, eh? Now I want to show you guys how to enter. This is our 30 minutes time frame. That is good. But to enter, we don't use this 30 minutes time frame because you're gonna enter at the wrong movement. I don't know if you understand, but you must look inside the candlestick if you want a good entry. How do you look inside the candlestick? To look inside the candlestick, guys, you have to switch your time frame to a small time frame because here we're on 30-minute time frame. Some of us we can't enter here because you don't see any formation. It's a double bottom, it's a formation, it's a pattern. Yeah, we see it, but the right time to enter, how are you going to spot your entry? You're going to use small time frame. You can use M5, M1, but now I prefer M5 because M5 like unlike M1, like it can do a fake breakout. Like you can see those if because there are some of us who knows how to read candlesticks. You can read M1 candlestick, but M5 candlestick you can read it. So I want to show you how to enter on our double bottom. You must look inside the candlestick. This candlestick here, you must look inside it. How do you look inside this candlestick? You must go to our M15. I'm going to show you how to look inside the candlesticks so that you can get the right entry. Because some of us, I know, we trade small accounts, like we can enter and just forget. Like we have to enter at the right time. Unlike those who fund 100, they can just enter everywhere. Like if it's a double bottom, like and there's no need for you to identify it. But for the sake of the analyze, you must look inside the candlestick so that you can confirm everything. I'm going to show you how do we confirm it, guys. I did add some of that. Show
No need to call Child Protective Services within 5 years that you've been their neighbor, but it was the day that they refused
guys,
to
please
be
meet yourself, guys. Yeah, found it.
Yeah, is that one?
Yeah, this is yeah. Let me check. Yeah, here, guys, is where we look inside the candlestick. As I said, on our empty time frame, we couldn't look inside the candlesticks because that time frame is too big and it doesn't have the formation. It only has double bottom. But where do we enter? You cannot see where to enter. But if you can look inside the candlestick, we can see where to enter. Let me show you. This is our double bottom. If we look inside the candlestick, I'm gonna highlight this one. Yeah, over here. This is our empty candle, one candle. Let me change the color. Let me just highlight the color. That doesn't look the same. make sure, guys, if like you want to enter, you want a proper entries, make sure that you use a small time frame, because small time frame, like you can see like when to enter exactly. Because on M30, H1, like you can't enter. You're gonna enter after 1 hour. If you're a technical trader, yeah, you're gonna wait for another hour so that you can enter. So yeah, we don't want to wait for another hour to enter. We want to enter now. So how do we enter now? I'm gonna show you how do we enter now. What is that item? Next thing, yeah, over here. Yeah, over here. Yeah, as you can see, guys, like I was talking about, like you must check inside the candlestick, like what's going on inside the candlestick. This candlestick is our M15 candle, né? And it doesn't have a formation. So which means like some of us, né, we're not going to enter here. Because like there's no formation, like sort of a double formation, maybe you can confirm or something like a pattern in M1 or M5. Let's check to our M5 and see like this candle here, like what it did. Let me show you. M5 candlestick. Now we're looking inside the candlestick now. Remember, like this is how you can spot the good entries, sniper entries. You use small time frame. You can't use big time frame because unless if you have a huge capital, because if you don't do this, which means maybe you funded 50K or 100K, yeah, it's fine. But those who fund small accounts, you must make sure you look inside the candlestick so that you can confirm your direction. Like, yeah, let's check here. This is our M15. That M15, one candle that I was talking about, like you guys, like you can't enter here because you don't see what's going on inside the candlestick. But now we see like what's going on inside the candlestick. Yeah, this thing is our double bottom. Né? It's our double bottom. And over here, we're having another double bottom where we looked inside the candlestick. Here's our another double bottom here. But if we switch to M15 or M30, we're not gonna see this pattern, this double formation. We're not gonna see it. But because now we're looking inside the candlestick now, we can see the pattern. We can see that this thing is a double bottom and is a good buy. And which if you wanna enter, let me show you. You enter after the neckline. I trust like you guys know what is neckline. This is our neckline. This thing, our neckline. Even here, we have the neckline. And remember, here, guys, like we're inside the candlestick, we're inside M30 candlestick. This is our neckline. Because, as I said, like some of us, we can't enter at the bottom, but we can enter at the breakout of the neckline. Now we're having two formations. Now we're having two formations. We have it in our M5 time frame, and we're having it in our M30 time frame. Let me show you where to enter exactly. Small account, only small. I'm gonna show you big account. I said like even like you have a big account, don't just enter because you have a big account. Big account also blows, guys, if you don't apply risk management. Yeah, for small accounts, I'm gonna put this horizontal line here. Yeah, this one. Let me change the maybe I can make it trade or blue. Yeah, I can make it red. Make it, yeah. This is our formation, our double bottom inside the candlestick. This is our double bottom outside the candlestick. Double bottom outside the candlestick, double bottom inside the candlestick. So here, guys, you guys with small account, uh, if this thing breaks here, I know like some of you you're going to enter here, but if like like always in the market, there's a pullback. So you must be careful because pullback can chow your account. So be careful when what time to enter. Let's go back to our M15 because now we're on M5. I was showing you guys inside the candlestick. Now I'm gonna show you outside the candlestick at our M15 time frame. Uh, uh, yeah, yeah. Now, guys, I'm showing you outside the candlestick. I'm showing you outside the candlestick. Yeah, this is outside the candlestick. Like here. So here, guys, here you can see this is our outside candlestick and this is our double bottom. Over here, we don't see any formation like double bottom, but we can see the double bottom because here the market have created the equal lows, né? Which create the double bottom. Here, we don't see any formation, but if you can go to M5, you can see this thing is a double formation, which means is a reversal. Inside the candlestick, we already have the double bottom. For confirmation, you must look inside the candlestick so that you can confirm like this thing is gonna buy or is gonna sell. So now, since we know a double bottom is a reversal pattern, now we must check inside the candlestick. When you get inside the candlestick, we find that it is market have created another double bottom. So which means now we're having like two confirmations. This line, it was our neckline inside the candlestick, which was our M5 time frame. Here is our neckline in M15 use time frame. So if now you enter here, you're going to enter at the bottom because you checked inside the candlestick. But if you want to enter straight on the neckline, let me show you on the M8 what I'm saying. Yeah, I must go back again. I'll show you. Yeah, M8 time frame. This is our double bottom. As you can see, this one candlestick is an empty candlestick, but in M5, we're having another double bottom in M5, which confirms our double bottom, which means we're having like two confirmation, like to show us that we're going up. Here's our neckline. If you want to enter inside the candlestick, you're going to enter here. Over here, you're going to enter here. So now, because like we're using a bigger time frame, né? Some of us they were going to enter here outside the neckline. Some they enter using the pullback. Now I don't enter pullback. Now I prefer to enter from the root, from the tail. I want it from the tail because I know how to spot entry. Yeah. So from here, yeah, if I was you guys like using a small account, I was going to enter here at 391229 because this is our neckline and this is our M30, remember. But over here, if you enter here, which means like you show us like you don't only use a bigger time frame to spoil your entry, but you can use a small time frame so that you can enter on the route. Like if you can see here, guys, like here, a small time frame is the best when it comes to spot entries to enter using small accounts, big accounts. Big accounts, you're gonna make a lot of money. Small entries is where you're safe. You can enter, you can add. Here's our let me check. Yeah. I wanna show you like where to put our stop loss. Ne? Stop loss. I know you guys know this, but stop loss, it must always be below the equal lows. This is our equal lows. That made a reversal for double bottom. And I'm going to show you to confirm for our third confirmation on the double bottom and double top at the same. I'm not going to explain about the double top, but I'm just going to highlight you somewhere. Guys, like to see if double bottom is valid. Now I want to show you like to be sure that you're doing the right thing. First thing first, you must look for a key level. This is our key level. Let me just highlight it because some of us, yeah, this is our key level. Because here, market once made a big movement, which is our key level. And now we're having a double bottom. This double bottom, it shows us like this key level is valid because now we're having like a double bottom, which is a reversal pattern, which means we have a lot of buys here because now we're having like a double bottom and this is our key level. It once made a huge movement. Gonna edit text here. This is our neckline. That is our neckline. This one. I'm gonna let this equal lows. This is our equal lows. Yeah, this is our equal lows. That confirms us that this is a double bottom, a confirmed one. And here, guys, this is our key level. Let me just highlight it because I'm not gonna highlight it on our double bottom. I mean double top. But on the double bottom, I'm gonna show you everything so that you can also apply them on the double top. Yeah, yeah, this is our key level. Yeah, this is our key level, guys. You guys, like I told you, like if you wanna see if like this double bottom is valid, you must check, you must look at your key level where market like once made a big movement, which is here. This is our key level here. Now is where like we confirm that this double bottom gonna do something for us, gonna make money for us. And to enter, I showed you how to enter. Here is where you can put your stop loss. And here, guys, we're making noise, guys. You guys making noise.
Sure.
Yeah, I was busy meeting someone here because it's making noise. Guys, please don't make noise, guys, because like if you don't want to listen, guys, like because there are some who are listening and some are making noise. You're disturbing others, guys. Yeah. Yeah, I was showing you like this is our neckline. And guys, we have our neckline inside the candlestick. Remember, where you can enter your trade, which is a breakout. Like even here, you guys, I know you were going to enter at the breakout, but if you have a small account and you know like you're scared like to enter like a breakout, you can wait for maybe a pullback to enter, but pullback it's not all that doesn't happen always. Like sometimes, not always. Let me show you if you want to enter using a pullback, how are you going to enter using a pullback? Let's go inside the candlestick. As I said, this is our M30 time frame. Now we're gonna go inside the candlestick of M30 time frame. Let's go inside it. I want to show you the right way to enter a pullback. If you're scared to enter at the bottom or at the neckline inside the candlestick, you wanna enter at the neckline outside the candlestick. Let me show you. Yeah, this is our. I wanna you guys like you must pay attention here. Like pay attention. I wanna show you like how to enter using if it's M8 it's fine, but where are you going to enter? You can't enter using M8 time frame because you're not seeing any reversal pattern. Enter where you see what you know. Don't like don't trade what you don't know because if you say what you don't know, you're gonna have a problem. Yeah, over here, guys. This is our M30 a candle that I showed you. Like you must look inside the candlestick. The moment you look inside the candlestick is where you're gonna see like this thing is a reversal pattern, which means like now like you're confirming the market for the third time because now you're from the double lows, equal lows, which make a double bottom, and we look inside the candlestick where these other lows started. Now we see a double bottom reversal, which is a pattern. If you entered here, it's the same thing, guys. You're gonna enter here on using the pullback. You're gonna enter over here. I'm gonna show you on the empty time frame, but you can't enter it using empty time frame because you didn't confirm anything. But using some small time frame, you're gonna confirm where to enter and where to execute a trade because marketplace, over here. Yeah, this is our as guys, like I told you, like to confirm a double bottom and double top. Like you need like to analyze the candlesticks. Like this is our equal lows. It has our like from here it has the equal lows. Even here it has the equal lows. Which and this is our pullback. But it was our breakout. Not everyone can enter the breakout, but the pullback. But we can enter the pullback, but breakout. Not everyone can enter the breakout because some of us like we don't know. Like if the market a break like you can't tell me like this market is outside our neckline because you don't know how to spot the interest using a breakout. I'm gonna show you this is the same thing like that I showed you on these two lows, equal lows. Here is where you're gonna put your stop loss. Same as this one is where I was going to put my stop loss on the equal lows. Ne? So it's not where I enter. I put my stop loss here, then I enter where I enter on my neckline. This is my neckline. This is our neckline on the bigger time frame. This is our neckline on the small time frame. And this is our neckline on the small time frame. So I know like some of you were going to enter all the neckline of the outer candlestick, which if you can go to M30, you're gonna see only one candlestick. You're going to enter here, over here because this is our neckline, a breakout of the neckline. So we're gonna go to the empty time frame. I'm gonna show you. You're not going to enter because like you don't see a movement there. But if the minute you go to small time frame is where you're gonna see like this is where you have to enter. I'll show you. Yeah, over here, guys. Yeah, you see, this is our neckline. Even here, this line is our neckline, but it doesn't show that it's an like line because it didn't go inside the candlestick of M30 time frame. But if the minute you go to the M30 time frame, you're not gonna enter because you can't enter like only looking at the candlestick for going up and saying like this market is going up and it didn't confirm anything. You didn't see double bottom, the equal lows, the key level. You must post the things. Yeah, well, if like you're scared to enter a breakout at our neckline, you must wait for a pullback. Then for pullback, we go inside the candlestick. The same thing as I spot the entry here. This is our entry, our second entry, our third entry. But those with small account, if you want to enter, make sure you always go inside the candlestick. Because if you don't go inside the candlestick, you're not gonna enter. Because you can't just enter because you see this bullish, this candle is buying anyway, you wanna buy, but you don't wanna confirm like why is this thing buying. You must confirm inside the candlestick. You must use the small time frame. Even M1 M1 is fine, but M1 I feel like it's for scalping because you just trade 2 minutes, 2 minutes, then you execute your trade, you exit, you enter trade, you exit, enter trade, exit. It doesn't confirm. It confirms, but then if you can go to our M30 time frame, you're going to exit because you're gonna see a long-term trade. But using M5, M15, yeah, it can gives you a big movement where you can enter. Let me show you another neckline. This is our neckline. Right here, neckline. Yeah, this is our neckline. As you can see, guys, I was talking about the same thing, like saying you guys you must use the small time frame to spot the entry, the good one, the good entry. Because if you use M15, M30, you're not gonna spot a good entry. If you have a small account, you're gonna blow. The next thing, you're no longer trading. So we don't want that. I don't. You can't spend 2 years in a trading and just wanna leave trading in a month. You must be serious. Yeah, over here. Let me go to the small time frame. I want to show you this thing. As I always say, you must look inside the candlestick. I want to show you here why I say look inside the candlestick. Let's go to the small time frame. Remember, guys, I'm not gonna teach you everything here. I'm here to teach you like how to spot entries. I'm gonna show you how to spot entries. Only how to spot entries. Our M5 time frame.
Okay, this is nice.
Yeah. Guys, please mute yourself, guys.
Una verga, yo.
Guys, please mute yourself. We don't want to hear the background sound, guys. Yeah, let's go. H1 time
Motho
frame.
depositile 1 second. O depositile 1.6.
Guys, please mute yourself, guys. Oh, the PC is dying, guys. I need a charger. Yeah, let's go back to the small time frame. Guys, please, we don't want to hear the background sound, guys. I said mute yourself.
Really nice technique.
Yeah, Mara. I want to explain this one. Yeah, guys, I was showing you like how to spot entries. Like if, as I told you, like if you have a script or something, you must write these things down because if you don't write them down, like I don't know, like where you're gonna get these things. So yeah, there's our neckline. Yeah, guys, as I showed you about a double bottom and double top, even a double top, it's the same thing as double bottom because yeah, we're having the same thing like necklines, equal lows, but double top has equal highs. Double bottom, it has equal lows. It must create them. But if it doesn't have the equal lows or equal highs, which means that is not a double bottom or double top. And to confirm double top or double bottom, you must also have what is called a key level. If you have a key level, that is where you're gonna confirm your double bottom. But you don't have a key level, you're gonna spot our double bottom, but you're gonna have to confirm it by breaking out our neckline is where you're gonna enter your trade here and put a stop loss on our equal lows. And some won't enter on the breakout, they're gonna wait for a pullback and look inside the candlesticks and go to the M1 frame and look for a pattern for a reversal. You can get double formation or head and shoulders inverse inside the candlestick. You can see a lot of things. If you can use even M1, you can see them, you can spot them. I think I'm done with the double bottom because even the double top is the same with double bottom. Now we're gonna move to our next topic. Yeah, let me check over here fast. Uh, yeah. Uh, yeah. As I said, like guys, if you wanna enter here, yeah, let me show you let me show you with the double top. If you wanna enter at the equal highs, which means, guys, you have to look inside the candlesticks is where you can spot your entry. And your entry must be here. But because you guys, like, you don't look inside the candlestick, you can't enter here. You're going to have to enter somewhere here at the neckline or wait for it to break and come and retest at our neckline. So if you guys want to enter here, you must look inside the candlestick. If you don't look inside the candlestick, you're not going to enter at the top. You're going to enter at its neckline. I think we're done with double top and double bottom. Now we're going to head and shoulders inverse. We're gonna start with here. I'm gonna do head and shoulders inverse. It's the same thing. It's just that its head is facing down. This head and shoulders, its head is facing up. So you can see our entry is over here. We enter at the shoulder, but some of us like we didn't know how to enter on our shoulder. I'm gonna show you how to enter on our shoulder and what it is called. It is called aggressive entry. I'm gonna show you how to spot the entries on our shoulder, not entering the market at the neckline. Even if enter here is fine because you're waiting for confirmation. You can enter here after a breakout or maybe after a pullback, then you enter. But me, I prefer to enter over here at our shoulder because yeah, you can't enter at our shoulder if you don't look inside the candlestick. Yeah, it is a head and shoulders, but if it breaks up. Like if like you look inside the candlestick, you're going to see like this thing is going to break or it is reversing for head and shoulders. Let's go to the head and shoulders. I want to show you like how to enter head and shoulders and how to enter all the shoulder. Because some of you guys enter at the neckline. Yeah, it's fine to enter the neckline, but I want to show you how to enter at the shoulder. Let's go back here to the chart. Yeah. Once again, then for the P. Yeah, chart. Uh, yeah, now guys, we're gonna use NASDAQ to spot because when it comes to NASDAQ, you can spot this head and shoulders and inverse. Unlike you stated like it plays, guys. Ah, it plays. The head and shoulders. Let me check for head and shoulder. Let me go to the bigger time frame. Let me just use 4 hour time frame. See where there's head and shoulder. I want the pure one because this one, these other ones are broken head and shoulder. I want the pure one. See somewhere there. What is it? What is it? Yeah, A1. Let me highlight A because yeah, I see something interesting. I see something interesting here. Let me just highlight A so quick. Yeah. I then want to go to our 1 day time frame. Yeah. This is our 1 day time frame, and this is our head and shoulder. I want to show you how to spot head and shoulder and how to enter on the shoulder and how to enter on the neckline. This is our head and shoulder on the bigger time frame. Remember, this is our bigger time frame, and you must always look inside the candlestick so that you can spot the good entries. Don't forget, look inside the candlestick so they can spot the good entries. Because if you don't look inside the candlestick, you're gonna blow. But well, the movement is correct. The movement is correct, but when I entered at the wrong time, this thing, let's see, let's check. Uh, yeah, this is how I need to look on the daily time frame. Let me put this rectangle on our shoulders. This is our shoulders. Like how to identify head and shoulder. You guys are gonna ask questions after because I can see comments here. You guys asking questions while I'm busy. Yeah, so here guys, I want to show you like how to I want to tell you like how to identify a head and shoulder. Ne? Head and shoulders, ne? Like it shows like it shows a loss of momentum ne? From the bias and which is correct because this thing like it shows like it's gonna buy, but then it reverse. We don't know what made it to reverse, but it reverse. We start to make a trend and it changes a trend because now we're having a buy here, but this other sell, the bearish took control, then it went up again from the neckline. I'm going to show you this neckline on the small time frame. The minute we look inside the candlestick, because now outside the candlestick, we cannot see where to execute our trade. You must confirm. Confirm. Here, our left shoulder is already formed, so which means we wanna look for another shoulder to be formed. So let's go to the small time frame, maybe H1. Let's use H1 time frame because H1 time frame, I think it is better than H4 time frame. Let's check here. Idea like no, it's too far. Way too far. I'm using bigger time frame because I want you guys like to understand this thing of looking inside the candlestick. Because if you don't look inside the candlestick, you're not gonna get the good entry. Yeah, let's check here. At our H1 time frame, this thing, it doesn't like if you can check here, guys, like this thing, it doesn't look like head and shoulders. But if you can go to a bigger time frame, like you can see, like this thing is a head and shoulder. I'm gonna highlight them. This is our left shoulder. I'm gonna highlight our right shoulder. This is our right shoulder. Remember, guys, now I'm here to show you how to enter using patterns because I feel like you guys know parents, but you don't know what time to enter and what time to exit. And where to put your stop loss. Let me show you. Yeah, I mean our left shoulder. This is our left shoulder. Check here. This is our psychology. Yeah. This is our right shoulder. I'm gonna highlight it too. Let me just start here. This is our head. This is our head. Check because we didn't see it properly. This is our head. Let me show you our left shoulder. Yeah, now I'm gonna show you our left shoulder, which is not formed. Like now it's formed because now, like this is the previous market, but now act like the market like isn't formed the right shoulder, and you wanna enter at the right shoulder. How do you enter at the right shoulder? To enter the right shoulder, as I told you guys, you have to look inside the candlestick. Always look inside the candlestick. If you wanna, if not if everywhere you enter using the bigger time frame, you must look inside the candlestick. M5 time frame you can look inside the candlestick using M5 time frames. You can use M1 time frame. You can look inside the candlestick using M5 time frame. Even M1 is fine. M30 is fine. If maybe using a daily time frame, like here, this was daily. This thing, it doesn't look like head and shoulders, but if you can switch this time frame to a day one time frame, you're gonna say episode head and shoulder. This is our right shoulder. This is our right shoulder. Let's go back to 1 day time frame. I wanna show you this thing. At our each one time frame, it doesn't make sense. This thing is a head and shoulders, but if the minute we go to our bigger time frame, you can see like this thing is a head and shoulder. This is our head, right shoulder. This is our left shoulder. And remember, guys, we want to enter here at our right shoulder. And I showed you like where to enter double bottom and double top at the bottom or at the top. Like to identify head and shoulders, the right shoulder, it must be equal to the left shoulder. So if they're not equal, which means that one it might be a broken head and shoulder, and which is really, really dangerous because the broken head and shoulders, like you cannot spot it, but then at the end of the day, when you check at, at your maybe H1, because you're not looking at your H1, you're busy with M15 or M5, you didn't spot the head and shoulders. But if you can use, maybe sometimes try to check all the time frames. Go to daily, weekly, monthly. You'll see these things. And always try to get inside the candlesticks. Yeah, now we're on our H4. Maybe H4 might be better than H1. Let's check our H1. Yeah, this is our H1. Yeah, H1 is better than H4 is better than H1 because H1 like doesn't when we go to H1 doesn't look like head and shoulders, but here at our H4, yeah, it's around there. Yeah, let's check. Yeah, now I'm gonna show you like how to enter on the right shoulder. To enter the right shoulder, you must look inside the candlestick. You must look inside the candlestick. Now, here is our H4. And remember, we're from daily time frame. And in our daily time frame, like we couldn't spot the entry because it's only one candlestick which is released after a 1 day. And you're not gonna enter because you don't want to check inside the candlestick. But if you can check inside the candlestick, you can be inside before it forms the right shoulder. Let's go to H1. I want to show you how to enter on the shoulder. Because you guys like to enter at the neckline. Yeah. Remember, like at our double top and double bottom topic, we were talking about the key level. Even here at the head and shoulders, we have what is called a key level. I'm sure you guys know what is a key level. Here is our key level. Our left shoulder is our key level because the market once made a big movement, and when it bounced back, it made a huge movement of going up from that key level, and now it is playing on that level, on that key level. Doesn't want to break. It doesn't want to break our demand, which was our resistance. Now acting as a support. Let's check it. This is our neckline. Let me just write it here. Neckline. Yeah, this is our neckline. Here, guys, if you can apply those things, head and shoulders, on the head and shoulders, you must look for a reversal pattern, which is information or double formation. So here, if you want to enter at the right shoulder, you must look for a double top, which has two equal highs. Let's check it. Yeah, here, this is our double top, but this shade on it is below, not above our left shoulder. It is below our left shoulder. It looks like a broken head and shoulders, but if you can go to daily, it is not a broken head and shoulders. As I told you guys, even if you can check here, like this thing, it doesn't look like head and shoulders. But if you can go to the bigger time frame, it does look like a head and shoulder. Let's check. Let's go to M30 because yeah, if you enter here, this is our double bottom here. It was our double bottom and it bought. And this it was our previous high. And now market went up for that high and it makes it to be equal, which is if these things are equal highs, which means it tells us this thing is our double top, and which means double top, we know it is a reversal pattern. And now we're having like a head and shoulders, and you want to enter before. You want to enter before. I'll show you how to enter before. To enter before, guys, like, you know, those things, like, you have to apply like a lot of things, trend lines, support, resistance, you know, those things. But today I'm not here to teach about the support and resistance. I'm here to teach how to enter using patterns. Yeah, here, like the right entry to enter using actually not using a small account or big account for a good confirmation. You must wait for the breakout at our neckline. And here's our neckline, which means your entry is going to be here. But if you want to enter at the right shoulder, you must look for a double top. Like maybe not, if it's not a double top, it must be a pattern. Like, I don't know what pattern, but maybe you can draw it, maybe a Paris flag or something, like those things. It must be a pattern inside the candlestick of daily, because now we're looking inside the candlestick is where we can spot our good entries. Now let me just draw a one trend line so that I can confirm like this thing is going down. This is our double top. This is our double top, and you want to enter over here at our neckline. And which means you'll have to wait for a breakout. Let me show you. As you can see, guys, this is our a breakout on the neckline. This is our neckline, and you guys were going to enter at price 12,462. But if you look inside the candlestick, you are going to enter at the right shoulder because you saw like this thing is a double top, and double top, you know very well, double top, it has equal highs, and which means it's a reversal pattern. You're going to enter over here the moment it creates a double top. Let me show you if you didn't see this double top, where you were going to enter at the small time frame, because this is H1. Let me just highlight it fast over here. Over here. Now when I look inside the candlestick of M30, let's go to our M15 time frame. Remember, guys, always look inside the candlestick. Always look inside the candlestick so that you can have like even like you tell someone like about the entries. If you tell someone and the first time or second time telling him or her about the market. If you tell him or her to look at the candlestick, they're gonna understand more because the moment you look at the candlestick, the market becomes so simple. But if you don't want to look at the candlestick, market is gonna be hard for you to understand the market, and you're not gonna enter. And you know this thing that you have to enter here, but you're scared to enter because you don't want to apply those rules. You just want to enter, and there's no way you can just enter because you have to read the market. Like if you don't read the market, you'll always blow. If you make profit, it might be a lucky day for you to make profit because sometimes market you make money, not see the direction, you just enter. Let me go inside this M15 time frame from H1. Basically looking, I don't find it. See that. Over here. Yeah. Yeah, I was still talking about you must get if you wanna enter at the neckline, it's fine because this is a good confirmation to enter at the neckline. As you can see here, this is our breakout at the neckline, and the market have went down aggressively. But if you want to enter on the right shoulder, you have to look inside the candlestick of H1 because there I was busy looking at the highlight. I didn't find the highlight very well, but I'm gonna go back and show you like a good entry. Let's check. As you can see here, if I can go to our M5 now, you're gonna see something like M formation or triple top or double top, which confirms that market gonna sell because you know very well that double top, triple top is the reversal patterns for the loss of buyers, and now I wanna sell. Let's check it over here. As I said, guys, we must look inside the candlestick. Here is our, even here we have a something like a head and shoulder. Let me just cancel this and highlight it over here. Let me cancel this thing. Even this thing is our head and shoulders, guys. It's our head and shoulders inside the right shoulder. We're having like a head and shoulder inside the right shoulder. This is our head. This is our left shoulder, our right shoulder. This is our head inside the right shoulder, which means we're going to enter the market over here because on our daily time frame, you have a head and shoulders, but you know like where exactly to enter your trade. But the moment you go to your smallest time frame, H1, you can see another head and shoulders inside the right shoulders, and is where you're gonna enter trade over here. Let me show you. Let me just put a horizontal line so that you can see. Let me put just horizontal ray actually. Yeah, you are going to enter over here. Exactly here. Not here. Here it might be our stop loss. I can put a stop loss here. Oh, because now here, market, there's no way market can go up there because this is our head and we already have a left shoulder and now it's creating the right shoulder, but you want to enter on the right shoulder, you must check inside the right shoulder using the small time frame so that you can have a proper entry. Here is our breakout on the neckline, is another entry here. some they were gonna enter the minute it breaks our trend line, not neckline. Our neckline is over here, but this is our trend line. The minute it breaks our trend line is where like some of us we're going to enter here, which is a great thing because look, here is our H1. Imagine, guys, like if you entered here, exactly here, from the breakout, and this is the H1, and remember, this is NASDAQ. This was simple, but you can't see it if you don't look inside the candlestick. But the minute you go to check inside the candlestick, you're gonna see a proper entry, bro. Let me just highlight here again. Yeah, over here. If you can see, this is the now we're confirming it for the third time. You can even confirm it maybe 10 times, 20 times to be sure. Like you must be sure like this thing is a breakout or this thing is really a head and shoulders. Yeah, it is our breakout, but that entry to enter, it was over here. This is our low. This is our lower low for the neckline, which means we are going to enter. Even if you entered here, check the movement from here. The market just went down like aggressively and just started to create something like a pullback to our neckline, but didn't go to our neckline. So as I said, if you are scared to enter at the breakout, you must wait for a pullback to touch our neckline. Now check here, like the market was busy like correcting here, but didn't touch our neckline, which means if you are a pullback trader, you are not going to enter because you're going to wait for a market to touch your neckline and didn't touch your neckline. So which means you're going to miss the trade. And you don't have to miss the trade. If you don't want to miss the trade, always look inside the candlesticks. You're going to enter early. If you want to enter early, look inside the candlestick. Let me just go to H4. Yeah, for our time frame. I want to show you something. This head and shoulder is the same thing as inverse shoulder. Because inverse shoulder, his head is facing down, head and shoulder, his head is facing up. This is our head facing up. Inverse, his head must face down. This is our neckline. Yeah, some of us were going to enter here at the neckline, which is our breakout at the lower low of the neckline. But if you check inside the candlestick, you are going to enter at the right shoulder. And here it was going to be your stop loss. And your TP is where the head and shoulder started. Let's check. Here, it was your TP here because the market bought from here aggressively and correct here and went up aggressively, which means this is our key level. As I told you guys, like if you want to confirm, you must highlight like a key level so that if the market plays around your key level, you know that the market bought but went down aggressively, which means if it is buying, it's gonna use this key level, and this key level is our resistance, which means it's gonna sell here. Like the market didn't buy to our key level, but if you can check to our daily, this thing it was a head and shoulders. Let's check. Yeah, here is our this was our first entry. As I showed you guys, must look inside the candlestick. Here is our second entry for breakout of the trend line. This is our third entry. You see, like guys, like this, we're having like 3 entries. If you wanna enter at the shoulder, you must look inside the candlestick so they can enter at the right shoulder. But if you wanna enter using a breakout trend line, must draw a trend line. This is a breakout trend line, second entry. The third entry is here at our neckline, at our lowest. This is our lowest, this one is our lowest. According to head and shoulder, this is our low. So if it breaks the low, which means it's where you have to start executing a trade. And if you did execute a trade, you're not left behind. Still, you are going to make a lot of profit. Even here from the right shoulder, gonna make a lot. The second entry gonna make a lot. But here at the neckline, what is risky about the neckline? Neckline, sometimes you guys, you can fund small. And you fund small and you're telling yourself that I wanna enter at the lowest, at the neckline. And you find out that the market start to retest, which is a pullback that I was talking about. And it takes you out before the movement, before it complete its pattern. Every pattern is a reversal, but you have to like know how to spot them. Even here, over here. This thing, it was our resistance. But before it was our support, now it is our resistance, which means if we put it here, then now we're moving it to the top side here. And now it acts as our resistance. Here is our TP, our first entry, our second entry. This is our third entry. This is our stop loss. This is our take profit. First take profit. Let's go to H1. I want to show you those entries. Uh, yeah, as you can see, like this was our first entry, second entry, third entry. This is our stop loss. This is our take profit. This is how to enter a head and shoulder. Like if you can check, head and shoulders, it has three entries, but there, like I showed you, like it has one entry at the right shoulders, but normally, like guys, normally you guys, I know you enter at the neckline or you enter after the breakout. You wait for a pullback so that you can enter. Yeah, it's fine. It's fine, and you're gonna take a good trade. But I'm just showing you like you cannot just enter at the lowest. You can enter at the shoulder, but you must know how to enter at your right shoulder. To enter at your right shoulder, as I told you guys, you must look inside the candlestick. You're gonna see the pattern. Here is our head and shoulders inside the right shoulder candlestick. But if you didn't move from daily time frame to small time frame, you are not going to see this head and shoulders on our H1 time frame, which means we are going to enter at the neckline. But if you did go to small time frame and check inside the candlestick, check inside the daily time frame candlestick, is where you come across with head and shoulder, and it's where you're gonna. And if we enter here, you can't just enter here because you can't enter here using the bigger time frame because you don't see what's going on inside the candlestick, and which is risky. Can blow your account with a spike. Spike can blow your account. Yeah, this thing is the same as inverse shoulder. It's the same as inverse shoulder, just that inverse, its head is facing down. This one is head and shoulders, its head is facing up. So you must apply these things. Let's take this left shoulder back. Uh, this, it was our right shoulder. Yeah. This is our stop loss, first entry, second entry, third entry. I trust you guys understand. Now you can enter on your own, like you can spot the entry or the right shoulder. Unlike always waiting for the market to break our neckline so that you can enter, you always enter late. But if you want to enter early, you must always check inside the candlestick. If you check inside the candlestick, you'll never go wrong. You'll never go wrong. But if you don't check inside the candlestick, you, you won't go wrong, but sometimes you'll go wrong or you always go wrong. Because at that time, you'll be ignorant. Don't be ignorant because this is your money and you don't want to give it time. Give it time. You can't always fund. You're the one who's always funding, because you don't want to learn these things. Yeah, this is our head and shoulder. And I showed you where to enter the first entry, the second entry, the third entry. This is our first take profit, where is our this is the leg of the head and shoulder. This is our leg of the head and shoulders. This is the leg of the head and shoulders. That's why here the market retest. Yeah, market did retest here because this is our key level. Always highlight the key level. And key levels is where it helps you to, like, you see key levels, guys, like it helps you to confirm whatever you're analyzing buy or sell. This is our key level. Stay. This is our key level. Yeah. I hope you guys understand about head and shoulders, how to enter head and shoulders, what you must do to enter head and shoulders, what you must do if you want to catch the second entry. Obviously, you guys only know how to enter the third entry, but you don't know how to enter the first entry and the second entry. You must master all of those things. You must try to enter early. Don't always enter where we all know we must enter. No, you must try to enter early. Enter before anyone else. Is where you're gonna see, yeah, now I know the market. Okay, now let's move now. Moving to the second topic. I mean third. Third. If you wanna ask question, guys, you're gonna ask after I'm done here. Then, yeah.
Vale, ya voy a
Yeah,
poder.
no, guys. Let's check. Let's go back. Yeah, like we're done with double top and double bottom, and we're done with head and shoulders and inverse. Now we are on ascending channel and this ascending channel, and we also have this thing what is called horizontal channel. I didn't write it here, but I'm gonna show you. Now I don't know what we're gonna start with. Let's check. Uh, yeah. Now, guys, this is our, I don't call them ascending or descending channels, but here I do write ascending channel descending because this is what you know, like for me on my side, I call them bullish flag and bearish flag. And these things, they're so different because its lines, like its lines, its line, the trend line must be parallel. If they're not parallel, that is not a bullish flag or bearish flag. So how do we spot them? These ones are the simplest ones. These ones are the simplest ones. You must know like how to enter your trade. If you can master these things, you always know where to enter and where to exit. Let's go to the chart. Now we can use gold because gold, it use these things. Yeah, maybe you stayed because I saw this kind of movement inside your state today. Let's check your state. Let me just cancel everything here because I'm not. Let's go to the chat. I want to show you. I'm gonna start with ascending channel. Now I call it bullish flag. But you guys, you know it is ascending or descending because I can hear a lot of people saying like this thing is ascending channel. This thing is a descending channel. But now I never call them with those names. Now I was always calling them bullish flag and bearish flag to make it simple. Bullish flag, bearish flag. Just want to highlight here first. Yeah, yeah. Actually, yeah. Uh, this thing, ascending channels and descending channel, this one are the simplest. These are the simplest ones. I'm still checking. I'm still checking. I'll show you this ascending, descending channels. I'm still looking, guys. I'm still looking. I think I found them. So, yeah, yeah. I was now. We're gonna start with ascending channel. And remember, like its lines, it must be parallel. If they're not parallel, That is not a bullish flag or bearish flag because they must be parallel, which means they must be like on the same line. Like, let me show you over here, example over here. Yeah, now I'm showing you a bearish flag. Bearish flag, which is our descending channel. As guys, I told you guys, like this thing, like they must be parallel. If they are not parallel, you cannot call them ascending or descending channels because channels like they must be equal. Its lines must be equal. If its lines is not equal, that is not ascending, descending, or horizontal channel. Let's go to the small time frame because here on H1, you can just see what I want to show you here, guys. Let me see. Show you these channels. What is going on? In highlight here, show you highlight. I'm just checking, guys. I'm just checking. I want the pure one, like, yeah. Let me highlight it because if I don't highlight it, I'm not gonna see it. Yeah. Let's go to empty time frame and go back. As we can check here, now, yeah, we're busy with bearish flag, which is our ascending channel. Yeah, as I showed you guys, like this thing, like its lines must be parallel. If they're not parallel, you cannot call it ascending channel or bearish flag. We can even use M15 because yeah, we can look for maybe 8 hour uh no, like this. Let's go to our M15. This chat this pattern like the simplest one, and that's if you can master this one, you'll always be profitable. There's no way because at that time you'll be trading something that you know. And for confirmation, as I told you guys, you must always look for a key level. Must always look for a key level. If you look for a key level, no, you'll never go wrong. Yeah, as you can check here, this is our bearish flag. This is our bearish flag, and I want to show you like how to enter using a bearish flag. A bearish flag is a reversal pattern. It acts as a reversal pattern and also act as uh, continuation patterns. You can use it in in both ways, like continuations and for reversals. But if it on a key level, guys, like if guys always highlight your key level, because if you highlight your key level, you make everything simple. Gonna be simple for you if you highlight your key level, where the market once made a big movement. This one. Yeah, this is our key level. Our market here. It wants here, it wants a support. Now it acting as our, I mean, it wants a resistance. Now it acting as a support. And it went up and came down again and it respect again as a support. And remember, it was a resistance. Now it's a support. And here is our key level because market once made a big movement. And on our key level, if you see something like a bearish flag or bullish flag, uh, you'll have to draw your trend lines like this. Like your trend lines must be, yeah, let's check it over here because I can see on M15. This is one maybe the simplest one over here. Let's check at our M15 time frame. Because here on our M30 time frame. Let's zoom. I'll show you this thing. Yeah, even here, we're having a bearish flag. Show you this is a bearish flag. Remember, guys, now I told you I'm here to show you how to spot entries using patterns for reversal. You don't have to force the trend line. You don't force it because if you force it, is where you go wrong. Yeah, over here. Here you can see, guys, like we're having like a ascending channel. On my side, I call it a bearish flag. This is a ascending channel, and on my side, I'm calling it a bearish flag. Let's check here. And this thing is the same, guys. As you can see here, like this thing is a continuation. If you can master this one, you'll always be profitable. But if you don't master this one, because some of you, like guys, I feel like even here, you guys knows about the trend line and stuff. The first charge, the second charge, the third charge things, 90% rule. You know these things. So here, I'm gonna show you how to enter. Here on, you see on here we have like two entry points. On our head and shoulders or inverse, we have like three entry points. Here we have two entry points. How do you spot this? How do you spot these entries? The first thing, the first entry we spotted on our third charge. But you know, guys, it's not everyone can enter on our third charge, and which is our 90% rule to enter. Here is our first entry. Here's our first entry. Then our second entry, and this first entry is our stop loss at the same time. Our first entry, this is our first entry, this is our second entry. So, like to spot the entry over here, like this cell, you are not going to enter. This is M15. I'm going to show you like why I'm always preaching about to look inside the candlestick. It's too, this thing there, like you must look inside the candlestick so that you can have a good entry. You can see this thing. It went out, but don't mind it. Over here, this is our, let me just highlight the circle or something because I don't see where, let me check. Uh, 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 what was the- So it's our third. This thing made a third charge, and according to the market, a third charge is a 90% rule. So here, guys, I don't think you are going to enter here because it's a third charge. And first thing first, I said before anything else, like you must highlight your key level. The key level is the first thing first you must do. Highlight your key level so that if you see something like this, something like bearish flag or bullish flag, you can confirm using your key level. As you can check here, I've highlighted my key level. This is my key level. This is my key level. I know the market is not simple for the market to break this level to go up to the top side. This is the key level where the market once made a big movement of going up. So, and went down for a breakout, but it made a big movement, but not like the buy, the buy movement. The buy movement went too hard, but this sell went too hard after the second bearish flag. So how do we enter on the bearish flag? You must look inside the candlesticks, and this is our M15 time frame. So which means we'll have to go to our M5 time frame. Let's go to M5 time frame. I'm gonna show you this part over here. I want to show you like if you want to spot good entries, what do you have to look at? Let's go to M5. Yeah, I think I'm gonna go to M1 because now we're having this trend lines on our M15, and our M15 is our smallest time frame. It's not, at least if it was a H1 time frame. Let's go check. Go check. I don't think it will show you. I don't think it will show you. Which means I'll have to look for a near bearish flag or bullish flag. Okay, it's not gonna show here. Okay, let me continue it here. Let me just do it over here using a small time frame, but I'm gonna show you using M1 time frame. I'll go here. Yeah. Let's highlight it. I'm gonna do all this strong like this. So. As I told you guys, like these lines must be parallel. If they're not parallel, you cannot call it bearish flag or bullish flag. And to spot your entry, guys, I'm always telling you like you must look for the key level so that you can confirm your reversal pattern. You must have two or three or 10 confirmations if possible. Look, now I'm gonna highlight my key level. Let me highlight my key level over here. Let me take it here. This is my key level, but on my small time frame. This is my key level on the small time frame. Let me type it. Key level. This is our key level. This is our M5. If M5 it confirmed, like already confirmed, because this is a small time frame. This is if you can go to the M1. M1 is our smallest one. So here at least like if we have something like double top, it's gonna use it, and double bottom, we're gonna use it. But M1, like you confirm it, but you cannot confirm it. Like you must check at M5, M15 first before you go to M1, because M1 is for short trade. Always like just gotta scalp and go, scalp and go, scalp and go. And here we're looking for to complete the channel. Because you can't enter here and okay, I'm gonna show you guys. Let me not jump to other topic. Let me get down with this one first. Here, it's our first entry. I'm gonna show you how to enter here. This is our first entry. This is our second entry, the breakout. And here, our first entry, it is our stop loss, but I advise you guys to put stop loss above the channel. Don't put it inside the channel. Put the stop loss above the channel. This is our first entry, our second entry, our take profit over here at the end of the channel. This is the end of our channel. This is our take profit. As you can check here, the market from here, it went down. If you didn't enter here, you're going to wait for a breakout at our trend line, which is our second entry. So where you're going to put your take profit, going to put it at the end of the channel. You must complete the channel. Over here, let me show you here. The channel was completed. Over here, the channel was completed. This is our as you can see, our TP is here, and it is where the market must complete each channel. And it does went down, and after here, it retest up. It shows you that this thing has completed each channel. But if you feel like you wanna hold, which means you're gonna like, if you feel like you wanna hold, because this channel, this kind of channels is a reversal or continuation channels. But sometimes if this thing like market complete each channel, like there is a chance for it like to go up and do not come back. So which means you must always put your take profit at the end of your channel. Here's the end of the channel, and the market went down to the end of the channel, and then it went up, then it came down. So if you feel like you want to hold, which means you must check your bigger time frame so that you can confirm this thing is a long-term trade or is it a short-term trade. You must know that before you tell yourself that I want to hold this thing. Before you hold, check on your side, like this thing, is it a long-term or is it a short-term? So if it's a long-term, you know that I'm going to put my stop loss, then I just hold. You know that it's going to break this completed channel, but know that it has to give you a pullback, and it's pullback. It might go back to your second entry. This is our second entry where everyone enters at the breakout, but you can enter over here at the key level. Key level is so important, guys, because if you can check here, this is our key level, and this market have been doing a build up here inside the channel. It didn't break our key level, and this was your first entry. Then you must put your stop loss above the channel. Second entry after the breakout. This is our take profit, is where you complete our channel. This is a bearish flag, and it's a bearish flag, but on the poster, I call it as ascending channel, but on my side, I call it a bearish channel. Let me go to bullish flag, because this is a bullish flag. Let's go to a bearish flag. We're gonna use a bigger time frame, because maybe let's go to gold. Maybe gold, it has this kind of pattern. Let me check on the H1 time frame. I want to check for those pattern. Let me check it fast, quick. As you can check, guys, you see this thing of bullish channel and bearish channel. If you can master this ones, I'm telling you, there's no going back. You cannot lose like the whole week trading what you know. Like you must trade what you, at least if you trade what you know, like even if you lose, you know that at least I tried, because I've been trying to trade what I know, unlike others who trade what they don't know, and at the end, like they be saying like Oh, I blowed. I wanna leave this thing. You don't wanna learn. You don't wanna learn. I feel like you don't wanna learn. But if you learn yourself, you can do this. How do we do it? Like, how do we read the market? We the same. This is our bullish flag, which called a descending channel. This thing is the same. I mean, as I told you, like you must always highlight your key level. Let's highlight our key level. Let's check for our key level. This is our key level. This is our key level. Let's check over here. Um, yeah, this is our key level. This is our key level. As I told you guys, like to enter like at the bottom, because on our British flag, we enter at the top. On our bullish flag, we enter at the bottom. So how do we enter? Here's our H1 time frame. As I told you guys, you must always look inside the candlestick. Always look inside the candlestick. You'll never go wrong if you look inside the candlestick. But if you don't look inside the candlestick, you're gonna have a problem, and a serious problem, because and the only problem is to blow. You're gonna blow because you don't wanna wait for a confirmation. Here is our key level. We know there's many chances for the market to go up. This is our where our channel started. Our channel started here, which means it must complete it. So let's check on our small subframe, like which enter. As I told you guys, like we have a first entry, second entry. So here, I think, guys, on bullish flag, I'm gonna show you the right entries, because I can see, yeah, this one is so beautiful. This one. This is our second entry. Let me just say first entry for for okay, for me in that time, not now. Now I inside at the bottom. There's no way I can wait for a breakout, because I know what I have to look at. Yeah, here's our H1 time frame, H1 candle. This candle, ne? This candle, I bet I didn't see it, ne? But if I can go inside the candlestick, which means I'm gonna use the small time frame, I'm gonna see something like double bottom. There is no way. I must see something like double bottom or triple bottom or a reversal, any reversal. Let's check. Let's go to M15 first, because M5, only from H1, if you go to M5 candlestick, it's gonna be so many candlesticks. At least M15. Yeah, let's go. This is a bullish flag. And I told you guys, like this thing, like it must be parallel to each other. It must be parallel to each other. It must be parallel to each other. Must be parallel to each other. Yeah, let's check. Let me zoom the market. Let me zoom the chart. Yeah, here, guys. Let's look here. Ne? As I told you, like you must look inside the candlestick, because if you were on 1 hour time frame,